we're going to talk about something that we discussed last week as one of our two key qualities of a successful investment as defined by Jerry Frigon, who has some skins on the wall to back this up. But we talked about the quality of management at length yesterday. But today we're going to take up the other aspect of a successful investment, which is this idea of fertile fields of future growth. So I think of this as another way of looking at this. I view it as total addressable market. How big can the investment be? Jerry might define that differently, but that's how I look at it. That's a term we use both those terms very often in this shop by the research monkeys. So Jerry, future fields of fertile
growth. Somehow we got off on this fertile fields of future growth. It's actually just said fertile fields of growth.
I just like all the F's, but the problem is I get them twisted up. So
it's hard. Yeah. So this is obviously the most artistic part of the whole well-managed companies in front of fertile fields of growth. Keeping it simple and at a real 30,000 foot level, you started. What you suggested is really a good way of looking at it. Is determining what a business that has in front of it a market size that's significantly bigger than where it's at in its business right now. And that sounds really simple. It's not. It's obviously very hard. It may be a little bit easier in businesses where there is already a market. So, and let me step back and say, some of the best investments that we've ever made have been investments in companies where there wasn't necessarily a market for what it was doing yet. Okay. But we saw that there was an opportunity to be a gigantic market for what this company's product or service was about. And the difficulty on that is sometimes you're waiting, and sometimes waiting a long time for that market to come to fruition. But when it does, so the idea being, if you can find companies that are creating markets as opposed to participating in a market, or before they're participating in a market, it's a market that doesn't exist yet, but they see that there's a market there. And the classic example, I think, Steve Jobs was brilliant at this. If he would ask, not what's a problem to solve, but what's a product that somebody will want that they don't know they want yet. And then he was a master at that. And I think that's really getting to the heart of like some of the best investments that you can make if you figure that out. Problem is it's not realistic to think that you're going to find that every day, or you're going to find enough of those that you can, be adequately diversified. Now, no doubt. And as T. Rowe Price said, the great fortunes in the country have been made by men who held onto business positions through multiple market and economic cycles for decades and decades. And oftentimes those guys were owning just one company. It was their company, and that's how they became extraordinarily wealthy. But when you're talking about investing, where it's not you're not starting a company, you're not the company, you're investing. It's difficult to put a diversified portfolio together of companies that are all creating markets that don't exist yet. That's just it's not that common. So let's call it the next best thing is somebody that's involved in a market that is very large, where it already exists, or at some level the market exists, and they have a product or service that is just beginning to take market share. A good example for us would be in the early 2000s, we saw the opportunity in a company, what at the time was a small company called Salesforce.com, it started out as a client relationship management software in the cloud. At that point in time, people had no idea when you mentioned the cloud, they literally thought, it's like in the cloud. They didn't know what the cloud was. That's how early Salesforce was in the quote unquote cloud, let alone a business model that was software as a service, where it wasn't the old software model where it was make the software, buy a license, and then, you want to upgrade, you got to buy another license kind of thing. Software as a service is you basically are renting the software. Upgrades happen, you don't even know they're happening. And you're paying it's like a subscription that you're paying every month. Salesforce was brilliant at that business. And, when we bought Salesforce, maybe it was like a $3 to $4 billion market value company, which isn't small, but most of the world thought that Salesforce was a client relationship management software. And yes, they had this new cloud-based software as a service model. Okay, yeah. And it was displacing things like Goldmine and Act that were client relationship management software that you would download and put on your hard drive and all that kind of stuff. And everything resided on your hard drive. Clunky, had to buy upgrades. And, most people were thinking that's an interesting business, maybe even a good business. But what we felt Salesforce was really about was the overall enterprise database market, which was dominated at the time by a company called Oracle and another one, SAP. And that was like $125 billion, $100 to $125 billion addressable market right then and there in the early 2000s. And we envisioned Salesforce evolving into something that could take market share. So while it was doing, I think when we bought it, it was doing $200 or $300, $400 million in business revenue in a year. And at a $3 billion valuation, that was outrageously expensive. One of those which never traded at a value, quote unquote, by what the street would call a value. But if you saw that they were doing 300 million in sales in a market that was 125 billion in size, that they might, if they just got 10% of that market and got $12 billion and they're doing 200 or 300 million, I think we got something. So that's another way of looking at a fertile field of growth, is well managed. And we can have our issues with Mark Benioff on a lot of things, but he really was a great manager, especially in those early days, had a great vision. Fertile field of growth. I don't know. They were proving that a whole new frontier on a number of different fronts: cloud, software as a service, enterprise database, not just customer relationship management software. And the rest is history. Salesforce has gone on to be one of the most successful companies ever. And we ended up owning it for about 15, 17 years, something like that. So, there's a good, sometimes the best way to describe something is give an example.
When I think of this, I think of two different concepts. Those of you who might have heard of Tim Ferriss and the 4-Hour Work Week, he talked about this idea of effectiveness versus efficiency, where efficiency is how well you do something, but effectiveness is about how much what you do pushes the needle. And in that same way, if you have a great market share, but the total market isn't that great, it doesn't matter how much of a market share you have. Would you rather have a huge piece of a small pie or a small piece of a big pie, or even better, a big piece of a big pie?
We were just talking about a company today, will remain unnamed, but a great company. And, you don't get them all. I wish you bought it 15 years ago. It's like the Salesforce model. It's like somebody buying Salesforce today. All right. But the main story has been told. You get a company where they own, and Salesforce may even be a better example of still having some growth in it. But, this company literally owns the entire market that they're in. And so you start going, okay, well, how's this going to grow? From the standpoint of a growth company, it's so mature. It owns 100%, at least in the United States, it owns virtually 100% of the market. And so now their growth path is to go international, and that starts getting a lot harder, particularly in the business these guys are in. So that's a red flag for us when a company's already got the market. Sometimes people think, oh, it's dominant in the market. Well, yeah, okay, so it's got nowhere to go. Growth wise, it owns everything. It's not that it's a bad business. You'd hope they can start getting to where they're paying a dividend. And in this case, the company didn't do that. They were still seeing growth in front of them. That's a whole nother podcast sometime, talking about when a company gets to that mature growth stage and they're still trying to act like a growth company, when maybe what they should be is just a stable, good, solid, profitable business and returning shareholder money by dividend or whatever.
Something else I think of is it's so hard to find these unicorn type investments, because so much of what is done today and in terms of innovation is actually very iterative and just steps along the same continuum. And what we're looking for in companies, if I may be so bold as to say, is something that is breaking the rules and doing something, as you said, entirely different. How often do you hear two similes, metaphors I hate are like so and so on steroids. I can't stand that. And also, it's like Airbnb for now. The only really successful and
Example earlier today to describe a company.
is it a successful company?
It is.
Do you think it's going to, is it good? Is it successful long term? Do you think it's going to be like
We actually used that in our last podcast to describe the render network.
Airbnb for, I guess I'll give you that, but but you're talking about something conceptual
I'm not
versus, versus physical.
Who's absolutely in a business where they're doing what Airbnb is doing, like nothing else.
That's kind of like saying there was never outsourcing or renting until there was Airbnb. So
Right.
you're talking about, but we've seen Airbnb for cars, for swimming pools. I found that Airbnb for Airbnb seems to work pretty well, but everything else, whether it's been office space or some other physical product, I'm not saying it's been a total failure, but it hasn't been what Airbnb has been.
Right.
And so we're looking for what successful investors should be looking for, especially if they're in the private stage where you have to have these home run hitters. I mean, beyond a home run, you're looking for a 50 bagger. You need something that is going to be paradigm shifting.
You might be looking for something like Airbnb that took an existing business and so completely upended it into a different model. That's very innovative. And
A meta Airbnb, not necessarily just like something that's renting something to something else.
Right,
So,
right. It's. I think that's a good point because you can, and that's one of the things we look for. Companies where it's not like what they're doing is they're in a space that's with the Salesforce model, enterprise database, but in the cloud and using a SaaS model, and so.
For the record, whenever we're talking about the render network, I just always talk about, and maybe this comes with the confidence of ignorance, but I always talk about it's like the Hubble Space Telescope, because they're outsourcing that processing power to these different nodes. So I avoid the Airbnb comparison altogether. That's, just because I'm brilliant.
I just talk about it from the standpoint of renting GPUs.
So, but there you go.